Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you're tuning in, of course. I'm so grateful for life and thankful to be with you here this morning as we are going to be taking another fresh new perspective into the financial market. Well, before we kickstart the session, I would like to get some feedbacks as regards to the quality of the audio visuals. Is the sound good without distortion? Is the visuals okay? Please let me know in the comment section. So if it is not, I will be able to do the necessary adjustment to make us have a better experience out here. So I would love to see some feedback, please. If you can see my screen and you can hear my voice clearly, just type in hi in the comment section. All right, so let's see what we have right here. Okay, we have I can see 656, good morning to you. 230, good morning to you. 4230 says is new here, so you're highly welcome. Glad to have you around with us. 0382, good morning to you. 55892, 4562, 91015, thank you very much. And I see your comment here, Carrie. Good morning to you too. All right, so I think with this handful of comments, I want to assume that we are all on the same page. On this note, I welcome you all to yet another promising edition on the Extreme Speed Live. My own name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host, where we shall be taking on a fresh new look at the financial market. Well, in anticipation of today's trading session, I have conducted a comprehensive analysis on all of the assets on our watch list using simple parameters such as trend lines, key levels, and of course chart patterns to gain valuable insights into the historical price movement of all of the assets on our watch list for this week. And in fact, since the beginning of the week, we have been monitoring 4 major financial assets, which includes the US All Spot. We have the USTech100, which is popularly known as the Nasdaq. We have the GBPUSD, and of course we have the XAUUSD, popularly known as the gold spot. So we are going to be taking our time today to review how well this asset has been doing today, and of course strategically position ourselves ahead of the New York session. Now, for those who are joining us for the first time, you might be asking, what is it that we are doing here? Well, simply put, we come here together every day in anticipation of the New York session, where we come to review how well our positions are doing, see how we can manage our existing position if we have any, and of course position ourselves in such a way that we can capitalize on any trading opportunities during the New York session. So this happens on a daily basis, 10 a.m. UTC, 11 a.m. West African time. And I encourage you to stay tuned in to the end of the session and in fact be part of our subsequent sessions, as the more time you spend with us, the better you get in understanding how things works here, and of course eventually use the information you have gathered here to make your own independent trading decisions. So once again, you are highly welcome. Now, with that being said, here we shall be diving right into the business. And as usual, the first thing we normally do is to keep tabs with the fundamental aspect of the market. And by now, we all know how these fundamental factors often manifest on the charts in technical patterns and price movements. By monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns, hereby giving us valuable information that will help us position ourselves in such a way that we can capitalize on any move prior, during, and even after this event. So right here on the economic calendar, we normally focus on high impact event coming in from the economic docket that affects the assets on our watch list. So these economies for this week is the United States, of course, and the United Kingdom. Now for today, Wednesday, August 30th, we have a couple of high impact events from the United States, then a series of other medium impact events from both the United States and the Japanese economy. Now, the first high impact event for today is the ADP employment change. And for those who don't know what the ADP employment change is, this reports the change in private sector employment in the United States, indicating labor market trends. And how does this affect us? A higher figure suggests economic growth, potentially strengthening the US dollar, while lower figures could signal weakness and weaken the US dollar. Then we also have the gross domestic product annualized for quarter two, which provides an insight into the overall health of an economy, impacting investor sentiment and influences our trading decisions. Now, if you look at the data we have here, let's look at the ADP employment change. The previous data we have here is 324,000. That is for the month of July. And economists for the month of August are projecting 195,000, which is more on the lower side here compared to the previous data. So this is giving us an insight into some weakness in that sector. So we are going to be looking forward to what the actual data is going to be like. Then we have the gross domestic product annualized, which the data for the previous quarter came in at 2.4%. So economists are projecting that there's not going to be any change on that one, as it will be coming in at 2.4. So we'll look forward to see what the actual data is going to be like, which of course you know how we do it as technical traders. What we want to be doing here is to sniff through the current market structure to position ourselves in such a way that we can capitalize on any of these opportunities that might come up prior, during, and even after this event. So with that being said here, we shall be diving right into the business for today. And as usual, the first financial asset on our watch list is going to be the US oil spot. And on the US oil spot, we have an interesting situation going on right now. Remember, yesterday we started buying the US oil spot after noticing continued buy pressure around the $79.50 level. Now let's run through how the week started for us here in this community and what led to the idea of us buying this asset. Now, the first thing we observed at the beginning of the week was the fact that price action was confined within a range with between the $80 level, which happens to be our key level for this week, and of course the $79.50 area to further emphasize the level of indecision in this market. And you all know how we do it in this community when price action falls into this kind of range, and because of this uncertainty, we want to remain patient, waiting for a signal to come, which will come either in the form of a breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. Now, with the scenario we had here, of course, we saw how price broke out of the structure a couple of hours into the New York session on Monday morning. And in fact, price moved about, how many pips was that? It moved about 65 pips before the bearish momentum came in, bringing price back into that range. Now, one thing we observed here during our live session yesterday was the fact that price action, as soon as it gets into the $79.50 level, we saw how it became difficult for sellers to break through this level. At every point in time price comes into this area, we saw buy pressure emerges from the zone to further emphasize the strength of the buyers within this range. And as a result of this, we said we will remain positive for buying opportunities. As long as price breaks out of the $80 area, we shall be capitalizing on buying opportunities. Now, during our live session yesterday, we said we are going to be on standby above the $80 level to capitalize on an uptrend. Now, we saw what happened here prior to our live session yesterday. We saw price break out of the structure, and I told us all yesterday that we need to move our stop losses to break even, securing this current position. In fact, price came back, break down into the entry point. We were taken out of that position at break even, and about 3 to 4 hours into the New York session, we saw our price action climb back above that $80 level one more time to inside the current bullish momentum we are currently enjoying in the market right now. For those who took advantage of this opportunity, well done to you for being on standby, as you currently have, if you're taking advantage of the 80 breakout of the $80 mark, you currently have about 135 pips in profit. Then remember that we talked about adding more positions at the breakout of the $80.60 level, and in fact, if you are taking advantage of that one too, you will currently be running with about 80 pips in profit. So we have a total of over 210 pips in profit at this point in time. Once again, congratulations to you, and well done for being on standby to capitalize on this move. Now, if you still have a buy position running at this point in time, you know how we do it. The next thing we want to be doing right now is to ensure that we move all our stop losses to secure this current buy position. And of course, we do want to be giving enough room for price action to breathe. And in that regard, I'm suggesting that anywhere below the $81.20 level, and of course the $80.90 area seems most appropriate to lock in some profit at this point in time. So on all the buy positions, let's move our stop losses, secure those current positions, and remember that we always want to give enough room for price action to breathe. Now, with the current position well secured, what is going to be our next line of action for today's trading session? Are we going to continue to buy the US All Spot, or is there a chance that price could do some retracement before an uptrend continuation happens? Now, before we go into the details here, I would like to refresh our memories as regards to what we were able to spot here during our live session at the beginning of the week. And for those who are not part of the live session, this is a privilege and an opportunity for you to be on the same page with us. So the first thing we did at the beginning of this week was to look at the 4 hours time frame, where we were able to spot how price action has been playing out on this current market structure. Now, one thing we did here was to take into consideration the nature of price action since the mid-month of June, and in fact it was quite obvious that price action has been very, very bullish. And to emphasize the strength of the buyers here, we connected a series of higher lows to give us an ascending trend line to work with. Now, in addition to this ascending trend line was the key level at the $78.50 level, which has been a major determinant of price action since the mid-month of July. Now you can see how since price broke out of this level, price had remained above the structure to further emphasize the strength of the buyers. And at every point in time sellers try to break through, it has been met with strong resistance from the buyers, as you will see here. And in fact, during the course of last week's trading session, despite the strong bearish signals, we saw how it became difficult for sellers to break through that area, hereby giving us a platform, a demand zone that might be a platform that will send price climbing to find new highs. Now, with the scenario we have here, in anticipation of this new week, we were acknowledging that because price still remains above that demand zone, the chances of price action to continue to find new high is very high in this market. So we had a key level at the $80 mark, which we said we were going to be using to guide our trading activity for this week. And one thing, of course, we want to be looking out for to buy is for price action to break out of that key level. And when price remains above the key level, we want to be looking out for patterns and structures that will support the idea of buying that asset. And interestingly, the key level also shares a confluence with that descending trend line here, as you will see. And of course, when price broke out of that descending trend line, it was a clear sign that the trend line may no longer have the capacity to continue to negate that bullish attempt, which further strengthens our bias to go bullish on this asset. So with the information we gathered here on the 1 hour time, on the 4 hours time frame, it was clear that we want to be getting ready to buy. So what we needed to do then was to scale down into the 1 hour time frame, where we looked forward to see how market participants is reacting to this $80 mark. Now, when we scale down into the 1 hour time frame, we begin to see things more clearly, which of course I've emphasized earlier. As you will see here, we saw the range, price remain above the $80 level, and since then we saw the breakout of structure, which gave us the privilege to join that momentum. Now, with the scenario we have here right now, and considering the strong bullish momentum since the beginning of this week, I'm of the opinion that the likelihood of price action to continue to find new high is hereby increased. Now, how do we want to be joining this uptrend continuation? There are two ways to which we can join this. Now, the first thing here is we want to acknowledge this level, that is the $80.50 level, which was identified on the higher time frame, as you will see here. And then the $80.60 level, which was broken during the later part of the New York session, as you will see here. And we all know that from a technical standpoint, when price breaks out of a key structure such as this one, there are chances that we could have some retracement back into structure to incite an uptrend continuation. However, it's not all the time this kind of scenario happens, so it's just something we need to keep at the back of our mind, just in case selling pressure comes in. If it does come in, we then want to see how the market will be reacting to that $80.60 level to see if we can have buy pressure to incite an uptrend continuation. So that is one way we are going to use to capitalize on an uptrend scenario here. However, if price does not drop that far and instead it continues to find higher highs, then a breakout retest of the $81.50 level will be welcoming more buying opportunities. Now, there is a caveat to taking advantage of buying opportunities above the $81.50 level. So there are two ways to it. Now, for those who have been part of this profitable journey since the beginning of the week, that is, if you had bought since the beginning of the week and you still have a buy position running, you are profitable so far, then you can afford to leverage on the profit you have made so far to test waters above the $80.50 level, so you can afford to have your buy stop order above the $81.50 level to capitalize on that uptrend continuation. However, if you are new with us here today and this is going to be your first time taking an opportunity on the USOILSPOT, that is, you're coming in from a clean slate, then I will be suggesting that you remain patient here and wait for confirmations to happen. So as soon as we have a breakout of structure, scale down to your lower time frame. It could be the 10, 5, or even 15 minutes time frame to look out for signs that sellers are finding it difficult to drop below the $81.50 level. In fact, even if they drop, they are finding it difficult to stay below that area. And of course, this would reflect on the chart as price coming back to retest structure, continue buy pressure around this area with some touch of higher lows to give us an opportunity to join the uptrend continuation. So this is how we are going to continue the uptrend scenario here in this particular market. So let's see how the market will play out going forward, and we already have a simple setup that we can use to guide our move. So our center of focus is going to be between the $81.50 level and the $80.60 area, where depending on how price action reacts to this range will determine what our next line of action will be. So a quick recap here. So we said we are looking forward to some potential retracement into structure. It might not get that far, and it can even get as low as that area. But one thing for sure here is we look out for patterns that support that the price is going to the upside, and this would be like a double bottom, head and shoulder pattern, falling wedge, or whatever reversal pattern you can think of to join that uptrend move. However, if price does not drop, then a breakout of that structure retest will be all we need to be part of an uptrend continuation. So on this market structure, I'm still holding on to a bullish bias in this particular market. So this is my view here on the US All Spot for today. If you have any questions as regards to what I just illustrated, feel free to let me know in the comment section by dropping in your inquiries. So I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever before we move on to the next financial asset. And you can as well use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. All right, so in the absence of no questions, I want to assume that we are all on the same page, and the explanation is quite comprehensive enough for us to follow through. So with that being said, we shall be moving right into the next financial asset on our watch list for this week. So the next financial asset on our watch list for this week is of course the USTech100, popularly known as the NASDAQ. And in fact, we have a phenomenal positions right here on the USTech100, as price action has moved significantly well in our favor. It moved over 400 pips since we bought this asset at the beginning of the week. And in fact, before we go into the details here, I would like us to run through how the week started and what led to the idea of us buying this asset. Now, let me zoom right into the structure we spotted here at the beginning of the week. Now, we had our key level at the $15,000 mark, as you will see here. And of course, you know how we use our key level in this community. When price breaks out of the key level, we want to be looking out for patterns and structures that will support the idea of buying that asset. Now, in addition to that key level was the fact that price was initially confined within a range between the $15,000 mark and of course the $14,930 to reveal the indecision in the market at that point in time. And of course, you know how we do it in this community. When we have this kind of uncertainty, we want to remain patient, waiting for a signal which will come either in the form of the breakdown of the support line, which of course never happened, or the breakout of the resistance line to give us an opportunity to buy. Now, we saw what happened here. We saw price break out of the resistance line a couple of times. In fact, price came back to retest the structure many times. And in fact, for those who missed out on the opportunity, the market was kind enough to stay around that area for 4 to 5 hours before that bullish traction began. And remember, we also talked about adding more position to our existing trade, as we had the privilege of adding one more at the breakout of the $15,000 level. $15,100 level. And in fact, if you had added that position to your existing trade, you will currently be having close to 7 or over 700 pips in profit at this point in time. So well done and kudos to you for being on standby to capitalize on this move. And congratulations to everyone who has been part of this profitable journey. And if you still have your buy position running at this point in time, you know how we do it. The next thing we want to be doing is to move our stop losses and secure this current buy position. And from the look of things right here, I will be suggesting that all stop losses on all buy positions should be placed anywhere below the 15,320 and of course the 15,250 area. You remember we want to be given enough room for price action to break, just in case we could have some retracement before the uptrend continuation happens. So now with a well secured position on this market structure, what is going to be our next line of action? How are we going to continue to buy the USTech100 today, or is there chances that sellers could come in to do some retracement before an uptrend continuation happens? Now, in order to guide our trading activity today, I would like us to scale up into the higher time frame, where I want us to look at things from an holistic standpoint, and especially for those who missed out on our early sessions, so that they can also be on the same page with us. Now let's scale up into, I think we started the week with a daily time frame, right? So we started the week with a daily time frame where we obviously spotted an uptrend scenario here, and we took it a step further to connect the series of higher lows to give us an ascending trend line to work with. And of course, you can see how this trend line has been respected since the beginning of this year. Now, when we zoom into the current structure, we saw how the trend line was respected here in the last couple of weeks, as we saw how it became difficult for sellers to break through that trend line, which more or less supports the idea of getting ready to buy. And at the beginning of the week, considering the continued buy pressure we noticed here, we decided to scale down into the lower time frame to see how market participants will be reacting to the market structure just right above that ascending trend line to determine what our next line of action would be. So we were looking at the potential of an uptrend continuation or a breakdown of the trend line to incite a bearish opportunity, which of course the market structure did not give us any sign that sellers are likely going to be taking over. So in that regard, we scaled down into, I think we went to the 4 hours time frame a little bit to see some levels that we can use to guide our trading activity. Now on the 4 hours time frame, we had a simple setup. The first one here is that since the beginning of this month, price has been finding lower highs, as you will see here, and not until last week's trading session we witnessed the final breakout of that trend line, which was a sign that the trend line was no longer strong enough to negate the bullish attempt. And from a technical standpoint, whenever we have a breakout of a structure such as this level, as this trend line, we expect price to come back, retest the structure at some point to incite an uptrend continuation, which is exactly what happened here. As you will see, we saw price come back to retest the structure, which also lines up with this ascending trend line we spotted here. So you can see how market respected our scenario to incite the uptrend continuation, giving us the buy position we are currently enjoying. Now, in order to guide our next line of action for today, there are two things we are going to be looking at. Now, the first one here is the 15,400 level. As you will see, this level here has been a major determinant of price action since the mid-month of July of last year. Now, look at how this level was initially a buying niche at some point. We saw how buyers took over the market from this area before this level was broken during the early days of this month, as you will see. And since the breakdown of that level, price action had remained at below that structure. Now, in the last 24 hours, price action has gradually approached that zone, and as soon as price tested that level, we saw some selling pressure resume around that area. Now, we are back at a crucial moment in this market where price is back into a zone which has been characterized with selling pressure since the beginning of this month. Now, the question going into today's trading session is, will price action respect and reject this level one more time? That is, buyers will find it difficult again to break out of that structure to incite a bearish momentum. Is that going to be the case here? Well, if we continue to see selling pressure here, there are chances that price could drop back down. In fact, probably back into this ascending trend line to incite another wave of bullish momentum. That is one way to look at this one, or it could even come into this trend line here. Remember, we had this trend line spotted at the beginning of the week, which we spotted here. So this is another area where price could drop into to incite an uptrend scenario. Now, with this information we have gathered here, how do we intend to capitalize on this move? So what we are going to be doing right now is to scale down into the 1 hour time frame so that we can look at how the market participants has been reacting to the 15,400 level to determine what our next course of action will be. So now, scaling down into the 1 hour time frame, our center of focus is going to be around the 15,400 level. Now, within this area here, we saw some selling pressure resume during the early hours of today, pushing price to the downside. And at this point in time, look at what has been going on here. We also have a level here which is located at the let me see, I think let's use the 15,325 area, which of course you do want to be marking out on your chart right now. So we have the 15,325 level, right? So we want to be marking that level. So right now we have the structure. As you will see, that since the New York session yesterday, this area has been a buying niche, as you can see. And in fact, in the last couple of hours, we've noticed buy pressure trying to resume out of that area. Now, if the buy pressure will hold and persist, then a breakout of this line will welcome buying opportunities and welcoming more opportunities to capitalize on the uptrend continuation. And for those who had missed out on the buy positions we enjoyed in the last since the beginning of this week, well, this could be an opportunity for you to join and be part of this uptrend continuation. However, if price does not continue to the upside like as projected here, and instead price action drops below that support line here at the 15,325, then there are chances that we might be seeing some profit taking activities going on here. And of course, you know, it is expected from a psychological standpoint, especially for those who had bought at a very cheap price, let's say around the $15,000 level, will at some point want to be thinking of closing in some of their position to scoop in some profit, which of course will be reflected on the chart as a retracement of this impulsive move that we have been witnessing since the beginning of the week. So at this point in time, a breakdown of the 15,325 will be welcoming some counter trend opportunities here. Now, this kind of position here is suitable for counter trend traders, scalpers, or if you are a short-term trader, you can take advantage of this opportunity. But if you're a long-term trader like me, well, I will be waiting to see how far this retracement phase will go. So I will be looking forward to a bust up around that ascending trend line here to see how the market will be reacting to that structure. Of course, I'm of the opinion that we could be seeing some buy pressure around this area to incite an uptrend continuation. However, if that level is broken to the downside, then we could see some selling opportunities at retest to incite a further bearish momentum to the downside. So for the counter trend opportunity, that's in case if price breaks down the 325 level, then you can be looking at a minimum of about, let's see how many pips that is, about 190 pips to about 200 pips to catch there, which is not bad at all. But one thing I will emphasize here is that considering that it is looking like a counter trend opportunity, considering the impulsive move we witnessed since the beginning of this week, let's ensure that we are on standby to move our stop losses accordingly as soon as price moves significantly well in our favor, because buyers could come in anytime within this area to push price to the upside. So let's keep this in mind while we continue to monitor price action. So these are my views here on the USTech100 today. Our center of focus is between the 15,400 and the 15,325, where depending on how price action reacts to the zone will determine where price may be heading to today. And please don't forget that we have some high impact event coming in from the United States economic docket today, the GDP data, and of course the ADP employment check, which has chances of influencing how the market will anticipate and even after this event. So these are my views here on the USTech100. If you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions before we move on to the next financial asset. And you can as well use that time to mark out those levels on your chart, as you will be needing them as a reference point to make your own independent trading decisions. All right, I see your comment 98785. Good morning to you and glad to have you around. So in the absence of no questions, let's take this as a confirmation that we are good to go. We are on the same page and we shall be moving right into the next financial asset on our watch list. So the next financial asset on our watch list for today is the GBPUSD, and in fact we have an interesting situation going on right here on the GBPUSD, as price action has been looking a little bit range bound sort of a thing since the beginning of this week. But within the range bound activity, we begin to notice some intrinsic higher highs and higher lows here, revealing the potential that buyers are likely going to be pushing price to the upside here. Now let's look at how the week started for us here and what led into the ideas that we took advantage of this week. Now at the beginning of this week, we observed initially price was confined within a range between the 1.2600 level and of course the 1.25790 area, to emphasize the level of indecision at that point in time. And of course, when we have uncertainty like this, we want to exercise patience, waiting for signals in the form of either the breakout of that range or the breakdown of the range for an opportunity to trade. Now, because of this impulsive engulfing candle that we had here at the beginning of the week, I was of the opinion that price might likely be going to the downside as a result of that one. Though we saw price break down a little bit, we had a sell position triggered, but unfortunately price took us out of that position in a loss. Then we also had a buy position triggered here on Tuesday. I think on Monday we had a buy position triggered. Price moved about 30 pips in profit before the sell pressure began again to push price to the downside. We also had another sell position triggered, which also went into a loss sort of a thing before this bullish momentum began here yesterday. And in fact, we were able to scoop in some amount of profit here, if not recouping the loss we made so far, or we are close to about recouping the loss we made so far this week. And for those who took advantage of the buy positions right above the key level here, Well done to you for being on standby to capitalize on that opportunity, as you will currently be running with about 47 pips in profit on that first move. And remember that we had another level marked out yesterday where we said we shall be adding more position, and in fact if you are done, that one too is running with about 20 pips in profit. So with a total of about 60 pips in profit on two positions here, well done to you. The next thing we want to be doing right now is to move our stop losses and secure this current buy position. And from the look of things right here, I'm of the opinion that anywhere below the 1.263, of course we do want to give enough room for price action to breed, seems most appropriate to secure this current buy position, while we also look out for more opportunities at this point. Now, in addition, with a well-secured position here, what is going to be our next line of action? Now, before I go into the details here, I would like us to scale up into the higher time frame so that we can all have an holistic perspective into what is really going on in this market. Now, on the daily time frame, we acknowledge that price action has been bullish. Remember, we had an ascending trend line. In fact, we have a couple of them here that emphasize the bullish momentum since the last quarter of last year. So in the last 1 year now, the pound sterling has been gathering momentum against the US dollar. Now, at the beginning of this week, we acknowledge a key level at the 1.2600 area. Let me zoom this in a little bit so we can see things clearly. So we had the 1.260 level marked out here, and in fact, it has been a major determinant of price action. Look at how it was here in the month of May. We saw selling pressure around that area before we had the breakout of the structure in the month of June, and since that moment price action had remained above that level. And in fact, last week though, with a strong bearish momentum last week, we saw that as soon as price got into that 1.26 area, we saw buy pressure resume around that area again. And this is for us a sign that that level at the 1.26 area has a strong memory for buying power. And one interesting thing about that key level also is that it also shares a confluence with that ascending trend line we spotted earlier. So the question going into the new week was, will price respect the ascending trend line one more time, where the emergence of buy pressure here will incite an uptrend continuation, or are we likely going to be seeing a breakdown of the 1.26 to incite a bearish opportunity? And in fact, we spotted something that looked like an head and shoulder pattern right here yesterday, which further buttresses the possibilities that sellers could still break down the 1.2600 area. Now, with the information we gathered here on the daily time frame, we went down into the 4 hours time frame where we spotted this descending trend line, and coupled with our key level, we were positioning ourselves for today's trade, for this week's trading session. So we bought at the breakout of the 1.26, and right now it appears price action just broke out of that descending trend line. So with the breakout of this descending trend line, hold, or is it going to turn out to be a false breakout that will incite a downtrend continuation? Now that this is where the 1.26700 level comes in. Now this level has been a major factor in determining where price action goes, and one thing about this level last week was that we saw the breakdown of the structure happen. And from a technical standpoint, when price breaks down of a key structure such as the 1.267 in this case scenario, we expect at some point in time price may come back, retest that structure to incite a downtrend continuation. So with this information here, you would agree with me that we are at a crucial juncture in this market where price action appears to have come back into that level, and in fact we begin to see some selling pressure resume around this area in the last couple of hours. Now, will the sell pressure persist below the 1.267 to retest it to incite a downtrend, or are we going to witness a breakout of the structure to incite more opportunities to buy the GBPUSD. So going into the New York session today, you would agree with me that our center of focus for today is the 1.267, as depending on how price action reacts to this level will be determining what our next line of action will be. Now, in order to have a better perspective here, we want to be scaling down into the 1 hour time frame to see how participants in the market are reacting to this level. And remember that we are looking forward to some high impact event from the United States, which of course is having a tendency on this market. Now let's scale down into the 1 hour time frame. So right here on the, hold on a second please, I wanted to allow this one to show on the 1 hour time frame too, as we will need it as a point of reference to guide our trading activity for today. So I will zoom right into the current structure. So here we are, the 1.267, very important. We saw some rejection there. And this morning, while I was trying to decipher what our next line of action would be, I was able to spot the 1.265 here, which was the highest point as at this morning, and we saw the breakout retest, which also welcome more buying opportunities. As you will see here, I already have a buy position triggered here, and if you are taking advantage of that one, well done. Ensure you have a wider stop loss. Remember, price action just broke out of this descending trend line here, so there are chances that we could see some retracement back into structure before the uptrend scenario happens. So you do want to be having your stop loss anywhere below that structure, so that in case price retraces back into that level, you're still going to be in the market to be part of a potential uptrend. Now, with the scenario we have right now, I'm of the opinion that a further breakout of the 1.267 will be welcoming more buying opportunities. So for those who have been profitable so far this week, and of course being part of this bullish momentum, you can afford to have a buy stop order above the 1.267 to capitalize on the uptrend continuation. But if you are new here and this is going to be your first position, then you want to wait for a breakout, retest of structure. It could even drop to this area before the uptrend continuation happens. So this is how we are going to be managing our position, our ideas on the GBPUSD for today. And in fact, things are looking very bullish here, so I'm going to hold on to a bullish bias on the GBPUSD. However, in as much as we're looking out for buying opportunities here, remember that we cannot ignore the potentials of sellers. And in fact, we have been witnessing the bearish momentum in the last couple of weeks, and we have a descending trend line which was just broken, and in fact the breakout of that descending trend line could turn out to be a false breakout where price goes to drop back below the 1.263 to incite downtrend continuation. So because of this perspective, we cannot ignore the potentials of sellers. So how do we want to capitalize on a bearish opportunity if price action drops to the downside? Now we have an ascending trend line, which of course we identified at the beginning of the week, and we agreed that we shall be using this trend line as a yardstick to guide our trading activity. Now, for us to consider selling the GBPUSD for this week, I would rather want to see price break down both the 1.26300 level and of course the ascending trend line to join a bearish momentum here. And remember that if we do have a breakdown of this ascending trend line and that level at the 1.263, we are not going to be getting too excited, as we will need some confirmations before we jump into that position. So once we note a breakdown of structure happens, we scale down into a lower time frame to look out for confirmations that sellers are gaining momentum before joining that bearish move. And in fact, we have multiple levels here that we can use to maximize the potential of this bearish move if price action goes on to break down and retest these levels. So that is how we are going to be selling for today, but I doubt it that will happen. But if it does happen, we want to be on standby to capitalize on that move. So this is what I'm looking at on the GBPUSD today. At this point, it's looking very bullish. The only condition or criteria that will make us want to sell is for price action to break down both the trend line and the 1.26300 level. So these are my views here on the GBPUSD for today. If you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions, while you also use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. All right, so I can see your comment, Destiny Michael. Good morning to you and glad to have you around. In the absence of no questions, I want to assume that we are on the same page, so we shall be moving right into the last financial asset on our watch list for today. So the last financial asset on our watch list for today is going to be the XAUUSD. What a phenomenal position we have here on this asset, as we've been buying this asset since the beginning of the week, hereby scooping over 400 pips currently on this market structure. Now let's run through how the week started for us here and what led into the idea of buying this asset. Now, at the beginning of this week, we acknowledged this descending trend line after connecting the series of lower highs since last week, Thursday. And of course, because of this trend line, we were in a sell position initially, which never lasted long, as we were taken out of that sell position in a loss when price broke down the $1,914.50 level. Then in addition to this trend line was this range here that we spotted, where price was confined within the $1,917.60 level, and of course the $1,914.50 level to emphasize the indecision in this market. And because of this, we were thinking price would go to the downside. We had a sell, but unfortunately we were taken out in a loss. And with the appearance of buy pressure around this area during our live session on Monday, I told us all that there are chances that price action will continue to the upside. And in order to capture that bullish momentum, we position ourselves above this level at the 1,916 level, as you will see here. And of course, interestingly, that level also shares a confluence with that descending trend line. So we saw the breakout of both of the structures to trigger our first buy position for the week. We rode that move all the way up. I think price moved about how many pips on that first buy position? We had about 100 pips move. We had a second position here moving about 75 pips, and the third position here moving about 60 pips before the sell pressure came in to take us out of that position. And during our live session yesterday, I shared, was it not on Tuesday? Was it not on Monday? I guess was talking about. All right, so yesterday's session. Sorry, we had the scenario where this bearish engulfing candle was observed during our live session yesterday, and we said here that we shall remain patient, where we shall look out for signs that this retracement phase has ended before we want to be joining another wave of bullish momentum. And in fact, to help us capture the momentum, we talked about these three levels: the $1,917.60, the $1,916, and of course the $1,914.50 area, where we said if price comes into this area, any sharp rejection or signs of buy pressure around this area, will give us clues that buyers are likely going to be starting the next uptrend move. And in fact, we saw a hammer candle here. We saw a sharp rejection of the structure, which was a good sign to anticipate that. And personally, I had my buy stop order above the 1920 to capitalize on that uptrend move. And for those who had joined early enough, well done to you for capitalizing on that one around that zone to join that uptrend move. And in fact, this single uptrend move gave us about, let's see how many pips that was. From this moment here where I bought, price is running with about 185 pips in profit. So we remember we also added one more position here at the 1924, and this ran about 140 pips. That's about 320 pips in profit. And then we had a third position here at the breakout of the 1926, and we have about 120. So we have about 400 and close to 500 pips in profit on the XAUUSD. So it has been a tremendously profitable week for us, as the first half of the week has been very profitable. So well done to you, and congratulations to you once again for those who took advantage of this opportunity. Now, with the buy position running, if you still have a buy position, that is, if you have not been taken out of this buy position, well, it is advisable at this juncture that you move your stop losses to secure this current position. And for me personally, anywhere below the 1935 seems most appropriate to secure this current position, as of course we do want to be given enough room for price action to breathe. Now, with our positions well secured, what is going to be our plans for today? Are we going to continue buying the XAUUSD, or is there chances that sellers could come in at any point in time? Now, to guide our trading activity for today, what I did here, this is where our center of focus will be. So I will be zooming right into this current structure. Now, one thing I notice here is that since price action tested the 1938, we saw a scenario here where price action remained confined within a $3 range, that is between the 1938 and the 1935, to emphasize the level of indecision at this point. And this could be connected to the high impact event that everyone is looking forward to today, that is the ADP employment change, and of course the GDP data for quarter 2. Now, with this scenario here, it appears that there is an indecision right now as price is trapped within that range. So what we are going to be doing here, you know how we do it. Whenever price action falls into this kind of range, into this kind of uncertainty, we want to exercise patience, waiting for a signal which will come either in the form of a breakout retest of the resistance line to give us an opportunity to buy, or the breakdown retest of the support line to give us an opportunity to sell. Now, personally, let's talk about the potentials of buyers here, considering the strong bullish momentum we have been witnessing since the beginning of the week. Now, this old range here, that is this confinement within this range, could transition to a trend continuation pattern. It could be a flag pattern or a bullish rectangular pattern, where the breakout of the 1938 will be all we need to confirm an uptrend continuation. Now, for those who have been profitable so far this week, you can afford to have your buy stop order above the 1938 to capitalize on an uptrend continuation. Of course, if it turns out to not work accordingly, we just know we are leveraging on the profit we had made so far this week, so we are still going to be on the positive side of our portfolio. However, if you are joining us for the first time, then you want to wait for be a little bit more patient, wait for a breakout, retest of structure in our lower time frame. In fact, it could even drop to this area, but most importantly, let's see a breakout. Then the appearance of buy pressure at a retest of structure should be welcoming buying opportunities here. So that is how we are going to be capturing any bullish momentum at this point in time. However, in as much as we're looking out for bullish momentum, we cannot ignore the potentials of sellers, as this whole structure here could incite some retracement, which could be as a result of some profit taking activity. Now, from a psychological standpoint, those who had bought the gold at a very cheap price, let's say around the 1912 or the 1915 level, will at some point want to be closing in their position, taking some profit off their trades to secure some profits, and this could lead into some retracement moves where the breakdown of the 1935 could incite some selling pressure into a structure. But we don't know how far that will go if price action drop that far. But one thing for sure is that we have some levels here which we can use to guide our trading activity. So we have the 1926, we have the 1924, and of course we have our key level at the 1920. Now, depending on how price action reacts to this level will be determining if we are going to be buying at that point or getting ready to add more sell position. So just like we did yesterday, let's see if price will drop, and if it drops, we have some levels here which we are going to be using to guide our trading decisions. So if buy pressure resumes here, we get ready to join an uptrend continuation, and if price breaks down, retest the structure with continued selling pressure below these levels, then we will be getting ready to add more sell position. And in fact, if we are going to be selling below the 1935, we have a minimum of about 90 pips to catch and a maximum of over 150 pips to catch here if price action goes that far. But at this point in time, it is looking bullish, and the only condition that will make us sell the XAUUSD today is to see price drop, retest the 1935. So these are my views here on the XAUUSD. Our center of focus right now is between the 1938 and the 1935. So we do want to be marking out these levels on our chart as we continue to monitor price action. If you have any questions whatsoever as regards to this current setup or regards to what we have been discussing so far since the beginning of the session, feel free to drop your inquiries in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions before we call it a day here. I see your comment, Jack Rasentes. Good morning to you. Glad to have you around. All right, so in the absence of no questions, I want to assume that we are all on the same page here. And in fact, it has been quite an insightful and interesting session here on the XAUUSD Live, as we were able to take in on 4 financial assets for today. And for this week, of course, we have the USOILSPOT, we have the USTech100, popularly known as the Nasdaq, we have the GBPUSD, and of course the XAUUSD, popularly known as the gold spot. And on all of this asset, we were able to use our fundamental tools such as trend lines, key levels, and chart patterns to identify and position ourselves strategically ahead of the New York sessions today. So I encourage us to remain very patient. Let's ensure that all existing positions are well secured as we look forward to high impact event from the US economic docket today, and also ensure that you have marked out those levels that we identify today on your chart, as you will be needing them as a reference point to guide your trading activity. So I'm very confident that we are ready as we simulated all the potential scenarios that price action could make for today. For those who joined us for the first time, I do hope you were able to gain 1 or 2 things from what we discussed here today. And in fact, I encourage you to be part of this session tomorrow, as the more time you spend with us, the better you get in understanding how this strategy works, and of course be able to eventually use the information you have gathered here to make your own independent trading decisions. So it's on this note I wish us all the best of luck during the New York session today, and I look forward to seeing you all same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well this asset has been doing, and at the same time get ready for tomorrow's trading session. Do have a wonderful evening, everyone. Bye bye.